And while the MPC has raised its inflation expectations since the last meeting, for now, lower inflation and interest rates are expected to boost consumer spend. This is something Mr. Price can look forward to for further upside. Despite challenging conditions at the half-year mark, the clothing and homeware retailer reported a 5.2% increase in revenue, group sales growth of a similar margin, and a 7.1% rise in headline earnings per share, all while bagging market share. Alec Abraham, a senior equity analyst at Sasfin Wealth, joins us with his analysis of the performance. Alec, thank you so much for your time. Now, the headline earnings per share growth doesn't look spectacular. Or am I just being too harsh?
Well, considering the circumstances, it is actually reasonable.
Okay.
You must remember that for what feels like the longest time ever, we've been in an extremely low growth environment in South Africa. And for businesses to generate growth in that environment is very, very difficult. So, one of the things, for instance, that Mr. Price has been doing more recently is they've been expanding their reach into the South African market, growing into other income areas, particularly also other merchandise categories, but mainly into other income areas to try and generate some growth, like I said, in this very low growth environment.
Yeah, it's quite interesting, the fact that, of course, they are diversifying to really just eke out gains from every single segment as much as they can. I mean, Mr. Price is one of the favorites, if not the absolute favorite in that retail sector. Is this because it stands to gain the most upside from more positive, improving fundamentals?
I think all of the apparel retailers stand to gain from the improved fundamentals. It's a discretionary category, and when people have more money in their pocket, they won't necessarily buy very much more food, for instance, but they will go and buy clothes.
Definitely.
So I think all of the apparel retailers will benefit from this. But I think what's also special about Mr. Price is the management. I have a lot of confidence in the management. They've got a good handle on the market. Very, very good operators. So always keep a very tight lid on costs, and I think that sets them apart from some of the other retailers, and that's why I think the share price reacted so positively on fairly muted earnings numbers.
You talk about the market share gains, and I think they said they gained market share, I think, in 4 out of 5 months or in 5 out of 6 months. But there was 1 month in July where they did not gain market share, and they cite heavy promotional activity from competitors. Was Mr. Price here willing to forego sales for margin, and is this the kind of strategy that we can expect?
I think so. We've seen something similar, for instance, with the Black Friday specials.
Yeah.
When Black Friday started becoming a phenomenon in South Africa, retailers really put everything on special. Thinking that we're giving up a little bit on the price, but we're going to get the volumes. I think what they determined, though, is that there are no volumes in South Africa, and South Africans are far more constricted in their budgets, and they don't have the flexibility to upscale their spending on good pricing or whatever. So I think it's a very, very mature response to not chase sales that are not profitable. And I think it was a good strategy on their part.
All right. I was also taking a look at the difference and the contribution between cash sales and credit sales. And of course, credit sales still play a small contribution in the sales picture of Mr. Price, which is why I was surprised that they are still so strict on credit granting criteria, considering how small of a contribution that is. What do you make of this strategy?
Look, right from the word go, they've had the strategy of being primarily a cash retailer, as opposed to Truworths, for instance, which they believe that the credit really drives sales for them. So it's different strategies, and it's certainly a lower risk strategy. Being a cash retailer, you tend to carry very lower debt levels, things like that, for instance. So from that point of view, it's part of the mold. Having said that, they did indicate, though, that in the stronger retail environment, which we're expecting within the next 6 months or so, they would look to possibly slightly increasing their credit acceptances and growing that a little bit more. So it's not like that. It's not like they avoid it at all costs, but
Yes.
they certainly are a cash retailer.
Yeah.
Now, in terms, yeah.
Yes, you can carry on, Alec.
Yeah. So in terms of that cyclical upswing that they're seeing,
Yes.
we have seen lower fuel prices, which have been sustained for some time. We're seeing also lower interest rates, and today we had a 25 basis points reduction. And we've got the money from the two-pot system that's sloshing around in the economy. So from those three factors that really put more money in people's pockets, we are expecting a little bit of a cyclical upswing, and they're hoping to benefit a little bit from that.
All right. Any risks that maybe Mr. Price could look out here, or is it just one way up from here? And that's up.
No. Unfortunately, it's not one way up. If you look at the retail sales, and in fact, even Mr. Price's sales over this period, they've been very erratic. So very much dependent on cyclical factors. The reality is it's not one way up. It's going to be erratic for a while until we see GDP growth, which will fuel employment growth, which will fuel real wage growth, which is the real driver of sustainable increases in spending and consumer wealth. So really, we're all holding our breath for what this government of national unity is going to do. But quite frankly, we haven't seen anything change yet. So we still need those structural changes that's going to generate economic growth and put money in people's pockets in a sustainable manner.
Yeah, but in the meantime, we will celebrate the short-term positives, and we will celebrate as investors did today with the share price. Thank you so much for your time, Alec. That was Alec Abraham, Senior Equity Analyst at Sasfin Wealth.